Welcome back, everyone. My name is Adam. I have Rusmin. Hello, Victor.
Hi, everyone.
Thanks for joining us once again. Today, we're going to talk about the QQQ. So, besides the S&P 500, which is a very popular index that a lot of people invest in through ETFs, the other one is the Nasdaq-100, which the QQQ tracks, which is the ETF. And the reason why people like QQQ or the Nasdaq-100 is because it's a very tech-focused bias there. All right. And tech has done extremely well over the last 10, 15 years.
Yep.
And some people have been asking, should I invest in the QQQ or the S&P 500? I mean, that's another discussion. But for this particular roundtable, we're saying don't buy the QQQ. Yes. And there are very good reasons why. And then you'll find out at the rest of the video why we don't like the QQQ. All right. So before we jump into why we don't like the QQQ and what the alternatives are, why don't we talk about why people are choosing to invest in a tech-focused index like the Nasdaq-100?
The returns.
Yeah.
Because which track the Nasdaq-100 have higher returns compared to the S&P 500 for the past 18, 10 and 5 years. I have the data over here based on the total gross return CAGR, where the dividend reinvestment. So you can see for the past 18 years, the S&P 500 is about 10.7% inclusive dividend reinvestment, but the Nasdaq-100 is about 16.2%. So that's about a 5.5% difference from the S&P 500. For the 10 years, it's about 5% difference also, but for the recent 5 years, it's only 1.4%. So over a longer term, I think it's about 5.5%.
Actually, just to be clear, it's a 5.5 percentage point difference. In terms of returns, it's 50%.
It's
huge.
It's a huge thing.
So if you look at the data from the Nasdaq-100, based on Nasdaq-100 index by Invesco, right? So they have this QQQ ETF, right, which is very popular. I think since they launched it in 1999, Invesco QQQ has managed to have a total return net return about 1,177%. Okay, versus S&P 500, right, at 682%. So there's actually a cumulative outperformance of around close to 500%.
Okay, so Victor shared the CAGR figures. This is since inception for total returns. So basically, tech has basically the Nasdaq-100 has beat S&P 500 over the last 10, 20 years, basically.
By 500%.
So I think the concern with a lot of people, what they think is that, okay, Nasdaq-100 have beat S&P 500. Maybe their drawdown is even
is it more volatile?
More volatile than compared to the S&P 500, right? So I went back to look for all those crisis points, like year 2000, the tech bubble, 2008, the global financial crisis, 2020, the COVID pandemic, and the recent tech crash in 2022. Okay, so if you look back into 2000, of course, the S&P 500 actually outperformed in terms of the drawdown than the Nasdaq-100. Right, the S&P 500 actually draw down 45.2% from peak to trough, whereas the Nasdaq-100 was 82.8%. Okay, so that's basically the tech. So the difference is like plus 37.6% for S&P 500.
Okay.
Right. But if you look back into 2008 and 2020, right, in fact, Nasdaq-100's drawdown performed better than the S&P 500. So they draw down less.
It didn't drop as much.
They didn't drop as much as the S&P 500, right? It's not what usually people think, right? But in 2022, the crash, again, S&P 500 outperformed the Nasdaq, but it's just only 9%. Okay, but in the few instances, the rest is always Nasdaq-100 outperform the S&P 500 other than the tech. So what I realized is actually based on this short history of data of like 20 over years, right? It seems like only when the event is like only tech event, right? Nasdaq-100 tends to underperform the S&P, but in other events, S&P 500 underperform the Nasdaq. Right.
So if you look at the Nasdaq-100 constituents, they only invest in 100 largest domestic and international non-financial companies listed on the Nasdaq stock exchange. Okay, so that's their criteria. And in terms of industry breakdown, you can kind of see that technology actually accounts about 60% versus S&P 500, their IT, information technology, only account about 31%, which is almost half. Okay, all right. So that's the reason why I think every time there's a tech crash in 2000 and 2022, right, I think S&P managed to outperform the Nasdaq 100. Okay, largely because of the concentration. Right. So if you look at the top 10 holdings for Nasdaq 100, I think you have Nvidia, Microsoft, Apple, Amazon, Broadcom, Meta. Right, and then of course you have non-tech company like Tesla, which is classified under automotive segment under the GICS classification. And then Costco is not tech. Okay, it's actually a consumer staple type of business. Okay, so that's why I think every time when there's a tech crash, then Nasdaq will down quite badly.
Correct.
Yeah.
But whether moving forward, I mean, you based on S&P 500 history, I mean, the tech is only become popular after the 1999, you know, during that period, right? So the history is still very short in terms of the tech. You don't know moving forward how many times is tech crash and how many times is the right. But if you look in the S&P 500 history in the past, usually it's like financial crash and everything.
But what you're saying is that basically the Nasdaq-100 isn't exactly more volatile than the S&P 500.
Yeah.
It really depends on the type of crash.
Yes, correct.
Yeah.
Actually, people's perception is good result volatile, but actually it's not as what most people think.
Okay.
Yeah,
all right.
based on data.
Yeah, again, their selection criteria is only those stocks that are listed in Nasdaq.
Okay.
All right. And I mean, it may not be a good criteria actually, because sometimes some good tech company may be listed in NYC, right? But if you're okay with it, I mean, Nasdaq so far, I think they're in the right place at the right time. So they are, experiencing a boom in technology, especially in the AI, right, artificial intelligence, right? So this is an ETF. I think a lot of investors are also very interested because of the large concentration in tech. Okay, so QQQ is one of the oldest ETF right around. I think they have accumulated about close to 354 billions in asset under management, right? So right now, if you look at QQQ, the total expense ratio is about 0.2%, and the number of holdings is about 100 because they track Nasdaq-100, right? And the top 10 accounts about 50%. Okay, and this ETF is actually distributing in nature and is full physical replication of the index itself.
All right. So, and the reason why we won't buy QQQ is because
there's another similar product by Invesco, and they call it Invesco Nasdaq-100 ETF, which the under ticker symbol QQM.
QQQM.
Yeah. Right, so triple Q, right? And the total expense ratio only come in about 0.15%.
So it's exactly the same.
It's exactly the same, right? So, and the AUM, of course, is smaller, right? But give them enough time, I think it might overtake QQQ in the near future, right?
Yep.
So right now it's about 55 billion, right? It's still sizable, and the number of holdings is also very similar, and top 10 also very similar because they track the same index, Nasdaq-100.
And so it's basically it tracks the same index from the same ETF issuer.
Yeah.
Everything's exactly the same.
Yep.
It's just that the expense ratio is 0.2 versus 0.15.
Yeah. But also depends on what kind of investor you are.
Okay.
Right. Yeah. So if you are a long-term investor, okay, US or Iron, from Iron, right, you should consider QQQM.
Yes.
Okay. But if you are those like day trader or you are doing tradings, then QQQ will be a better spread and liquidity for you. Right. Options, QQQ will be better.
Yeah, because it's larger and it's more liquid, and the average bid to ask spread I think is a lot lower as compared to QQQM, right? So that might be a bit of saving there for traders. Yeah, so that's why QQQ, QQQM both are popular in their own aspects. Okay, but if you're a long-term investor, QQM might be a good choice.
Simply because it's cheaper.
Because it's cheaper,
it's
right?
exactly
And of course, if you're Americans, right, then you should look at QQQM, right? But for foreign investors like us, especially like we are based in Singapore, right, you might want to look at Irish-based domicile ETF, right? And then there are similar ETFs that mimic Nasdaq-100.
Yeah.
Okay. And we have, I think, two that is actually very popular. You have like iShare Nasdaq-100 UCITS ETF. The ticker symbol is CNDX. Okay, and the total expense ratio come in about 0.3%. And right now the AUM at the time of this recording is about 20 billion, right? And they have about 100 holdings. Top 10 also about 50%. Okay, and then the other one is Invesco EQQQ Nasdaq-100 UCITS ETF. Okay, this is also by Invesco, and it's kind of like mimic QQQ ETF, right? Except now this is domiciled in Ireland, right? And the ticker symbol is EQQU. Okay, there's one more ticker that's available, is EQQQ. That one I think is actually listed in London Stock Exchange, right? The trading currency is actually in British pound.
Okay.
Yeah.
So this is the USD one, the EQQU.
Yeah, the USD one is EQQU.
All right.
Okay, and AUM size is smaller as compared to the iShare Nasdaq-100 at about 14 billion. Okay, again, it's quite close.
Yeah.
Okay.
All right.
And give them enough time, I think these two would likely could continue to grow.
All
okay. The main difference between the two ETF, right, iShare and Invesco, Irish-based domicile ETF, is that one is accumulating, one is distributing. Right, iShare one is actually accumulating. Right, so those investors who doesn't want the dividend from this ETF, they rather reinvest it at the most efficient level, then I think iShare Nasdaq-100 will be more popular. CNDX.
Okay.
Yep.
Yeah.
I think for those who are new to this video, I just got quick explanation of why we're looking at Irish-domiciled ETF is because if you are non-US citizen, you invest in the US ETF, when they give back dividend, it's 30% tax. But if Irish-domiciled, that's a 15% tax, much lower.
Yep.
Okay.
Correct.
And the other one is the estate tax.
Yeah, estate tax.
Yeah, up to 40% for US assets, which the Irish-domiciled ETFs avoid entirely.
Yeah.
So we have the CNDX and the EQQU. Yeah. So looking at all of this, someone could be asking, hey, 0.3% expense ratio is a bit more expensive.
Yep.
Well,
than your QQQM.
Yeah.
Would you think the slightly higher expense ratio makes sense, provided, knowing that you avoid the estate tax and you lower your dividend withholding tax, but then the Nasdaq-100 has very low dividends anyway. So what would you think about that?
It depends on the quantum, right? If you're just going to invest like $10,000 in Nasdaq-100, then maybe it makes sense for you to go for QQQM.
Okay.
Right. But eventually the amount may grow. Right.
Yeah.
So eventually once you reach above, I think 60,000, right?
Yeah.
You start to get that estate tax and also withholding tax. Then obviously you might want to look back at the option that we just mentioned, the Irish-based domicile. Right. So might as well you just look at Irish-based domicile and plan it for long term. Then you don't need to switch around.
Yeah.
Yeah.
Alternatively, you can invest in QQQM until 60,000.
Yeah,
but it will grow over time. So even if you put in 10K, it could become 60K over time. If you put in 60K now, it's going to go beyond that.
Yeah.
Obviously, right? If you want that to happen, then you're going to hit the estate tax. So maybe it just makes more sense. If you want to just avoid estate tax entirely, just go with the CNDX if you want a accumulating version. Yeah, even though the dividend is not that high, you still, if you have no use for the dividend, just
less than 1%.
Automatically reinvest it into the ETF anyway. So the CNDX seems to be, if I had a choice,
trouble free,
I would pick the CNDX myself. Yeah, that would be my choice. What about you guys?
For me, I think if I were to look at Nasdaq-100, I think the whole purpose is basically to have higher weightage in technology focus, right? So actually Nasdaq-100 may not be a good index to look at if you are looking at a pure play tech, US tech, right? Because in the next 10 years, 20 years, AI is going to drive a lot of growth across the GDP around the world. Then obviously I want to look at pure focus tech ETF, and I think QQQ or EQQQ or QQM
or CNDX,
right, may not be a good option. Okay, there are other better options that actually we even I think listed down in the ETF DOJO. I think which is a new course that we just launched to basically teach you how to find the best ETF, and we have even selected the ETF for you. Right.
So what you're saying is that if you actually want a pure tech focus, because you really like the tech sector, technically you don't have to choose the QQQM or CNDX, because the weight in tech is, the exposure to tech is about 60%. 60%. So actually, if you're actually really bullish on tech, you should go 100% tech. And find an ETF that actually suits that profile. So that's what you cover in ETF DOJO.
So and actually, if you look at the S&P 500, all right, the whole sectors, right, tech actually drive the most growth, right, for the last 5 years, right. So that's why I think if you want pure play tech focus, then you should look at pure tech ETF rather than Nasdaq-100.
All right. So we do share our favorite tech ETFs in ETF DOJO. Just go to etfdojo.com to check it out. It's open until 3rd of August. So whenever you're watching this, it could be open or closed. We only open it for a limited time till the 3rd of August. So we teach you how to basically analyze ETFs. There's actually analysis involved when it comes to picking an ETF. It's not just you throw a dart and you pick an ETF. And we also teach you how to value an ETF, which is one of the most key things you can do for an ETF, especially when it comes to thematic plays like tech and other sectors or industries that you're looking at. So we teach you how to do that. And of course, we give you a watch list of our favorite ETFs, and one of them will be the tech ETFs that we're looking at, besides QQQM and CNDX, EQQU. But if you're looking at just pure Nasdaq-100, CNDX and all that still works pretty well, right?
They've done pretty well. And of course, for the ETF DOJO, though, we do have a web class coming up for those members who sign up for ETF DOJO. I think we're going to spend 2 hours or so, right, to go through the entire process of how to find the best ETF, and we also pre-screen the ETFs for you. All right. So, but back to the questions. This is why we don't invest in QQQ. Because it's just more expensive, and there's an exact same ETF by the same ETF issue, Invesco, QQQM, which is
cheaper, 0.15%. And if you want an Irish-domiciled version, you have CNDX, which is accumulating, and you avoid the estate tax entirely, which is great. Yeah. So for the purpose of like the Nasdaq-100, if you want exposure to that, my pick will be CNDX.
I think if you just narrow it within this Nasdaq-100, then of course it's going to be CNDX for me as well.
Okay, so if you've been wondering why we don't really talk about QQQ that much, I mean, we do talk about QQQ as an example, but it's not exactly the best or the most efficient ETF that you can pick if you're a foreign investor. Of course, if you're a US investor, it's a different thing. QQQ, I think, still works better in that sense. All right. So, is there anything else you want to share about this particular ETF?
That's pretty much it.
That's pretty much it. All right, so I think that's pretty much it. That's why we don't want to invest in a QQQ, because there are much better, cheaper alternatives which actually serve the exact same purpose. So do check them out yourself. Again, no recommendation to buy or sell any of the ETFs that we cover. We just wanted to let you know the alternatives out there. I think the world of ETFs, there's so many ETFs out there. It actually takes some time to actually discover new ETFs. It's like you never knew they existed, and then you go, oh, actually there's this ETF that actually is doing pretty well. Low expense ratio, checks all your boxes and everything. So we do cover that. ETFDOJO.com, do check it out if you're interested in knowing how to invest and value ETFs. All right, and we share our watch list with you as well. That's included when you join the course. All right, so go to ETFDOJO.com. It's open until the 3rd of August. And I think that's pretty much it, right, guys? All right, so my name is Adam, Rusmin, Victor. Thanks for joining us. Any questions about this, we're always happy to answer them in the comment section. If you like this roundtable, please hit the like button. And of course, subscribe. More roundtables coming up, and we'll see you again.